The world is rapidly changing. AI is transforming industry, but of course, climate risk can still disrupt everything that we think about on a macro level. We've been watching the progress of Hurricane Melissa through the Caribbean. With me now is Edmund Reese, the Chief Financial Officer of Aon, which is one of the world's biggest brokerages and business consultants. When you're looking at the impact that a Category 5 hurricane had in Jamaica, and we're just now starting to get a sense of the damage and the death toll, give me a sense of how Aon has handled insurance in the Caribbean and how it might come into play for a storm of this magnitude.
It's definitely coming into play. First, let me just thank you for having me, Contessa. And you're talking about the storm in the Caribbean. We have been focused on 4 mega trends, 4 major risks. Weather is one of them with climate risk. For this particular storm, it's devastating. We still don't yet know the impact of it. So clearly, that's something that we'll all keep our eyes on and monitor. You put that aside and you think about the resilience of the country itself, being able to rebuild. You're right, Category 5 storms, the pressure that comes from this is devastating. Aon has come in, our securities team, working with insurers and working with other outside capital providers to put a CAT bond in place, a catastrophe bond in place. In the severity of this storm, 900 MBs of central air pressure in it will actually have that CAT bond pay out over $150 million and help support the people of Jamaica as they rebuild.
Catastrophe bonds are sort of a recent innovation in the insurance industry. This one is a parametric CAT bond, so it doesn't matter what the damage is. You don't have to have certain damages for the insurance to kick in. Just the storm itself meeting a particular criteria in strength is what triggers the payout. In this case for Jamaica, Jamaica was the first Caribbean government to take a CAT bond like this, and I guess the first small island nation in the world to do it. So why is it important in a scenario like Jamaica to have this kind of immediate payout?
Yeah, so first of all, since Hurricane Andrew, I would say, CAT bonds and insurance-linked securities have come onto the scene. It's now a roughly $120 billion industry. CAT bonds themselves are between 55 and 60 billion, and Aon is the leader in structuring that for the past couple of years, putting on 18 billion or so. You're right in that if the storm itself meets a criteria, it pays out. And in this case, you should think about air pressure on a normal basis being, there's a metric, MBs, being over 1,000, about 1,010. One of the heaviest storms we've seen back in 2005, the lower the air pressure, the central air pressure hit 800,
wow,
and that caused a payout. This storm in Jamaica is expected to be less than 900, so that measure by itself is going to allow the payout to happen. The reason why it's important for them is because it allows them to rebuild the infrastructure, get the funds quicker, because what you have is a capital provider putting funds in the pool, an insurer putting the coupon for those funds in the pool. If the storm hits that criteria, they get the money in a much quicker fashion through other means. And so it's important for them to build resiliency, countries like Jamaica. And by the way, they had one before that didn't pay out in 2024. This one is in place from 25 through 27.
Yeah.
We now have this storm. It's going to pay out. They'll get the funds quicker and be able to bring support
but
to their country.
A lot of these islands are dealing with the same sort of hurdles that Florida is in terms of, we know you're prone to hurricanes, and so it's expensive to insure your property, and there may have been people, not just in Jamaica, but in Cuba and in other places where the hurricane has an impact, who are underinsured or not insured at all, and that creates another whole headache.
Just on that point, I mean, think about climate in general. We've seen nearly 370 billion in catastrophe losses, of which only about 40% is insured, 160 billion or so insured. That's higher in the US than it is in some of these other countries. And so us providing the analytics to help, whether it's a country or a corporation, minimize that volatility with protection, insurance protection or other capital, is an important thing to allow for resilience here. That's what Aon brings to the table, the analytics, the expertise to help companies be more resilient, protect their assets, and be able to grow and prosper.
Aon just announced earnings Friday morning.
Yeah.
Okay, this isn't, so great quarter. You're still seeing year-on-year growth. I'm curious because you have insight into not just the insurers who are providing the coverage, but also the businesses that need the coverage. And you're providing risk consulting to lots of different kinds of businesses. Give me a sense of what's driving the growth.
Yeah.
Where do you see opportunities and where are there maybe warning signs?
First, it was a great quarter for us, right in line with our guidance, right in line with our expectations. Not a surprise, but right in line. We had 7% organic growth. We grew earnings, adjusted EPS at 12%. That's converting the cash flow for us, so that's a good thing. Where's the growth coming from? Maybe I'll point out two areas for you. One is in our commercial risk business. Like you said, we're providing data analytics advice for essentially all the corporations in the U.S., large and now middle market corporations, because we're in that space. The growth is coming from, in our commercial risk business, one area to highlight is construction. Why do I say construction? Because I think about the boom in AI and technology and what we're seeing in data center infrastructure build. I just read a report from your network 3 minutes before coming in here that said the big hyperscalers spent nearly $70 billion last quarter in data center infrastructure build. We grew double digits in our construction business to help drive that growth because not only do we have that expertise, but we're hiring in that area. So that's one big area. You talked about insurers being insured. Our reinsurance business, where we're reinsuring, where we're insuring insurers, that business grew. That was partially helped by what we just finished talking about, the cat bonds. But the other area I'll highlight for you is just workforce, one of those 4 mega trends. The cost of healthcare and benefits going up, companies really wanting to put in new benefit plans, new coverage plans, preventative measures to help manage that cost but still attract and retain their employees. Those things, we had the data and the analytics on, and they help us grow, and we're seeing that come through in our results.
I want to go back to AI, the growth of data centers. And people who are interested in this area, it's obvious that Microsoft, Meta, Amazon, Alphabet are places where you want to put your money and you're going to see AI do the work.
Yeah.
And it's incredible. But this week we also heard from Caterpillar that they had incredible results. Why? Because their excavators are being used to go build the data centers. These data centers are massive and they're very expensive. And we're hearing companies say, okay, you know what, over the next 5 years, we're going to put $500 billion toward our infrastructure. What kind of a challenge is that for insurance? And I know that Aon's capitalizing on it. Explain it.
It's a challenge and an opportunity. And you just said some very important stats, so let's make sure your audience has the full context on this. There are roughly 5,000 data centers today in the U.S. The next 3 largest countries are Germany, UK, China, at roughly about 500 each, a little over, a little under, and then there's a big drop off from that. Aon has worked either advising or brokering capital on about a third of those data centers. So that means we have insight.
Globally or just in the U.S.?
In the U.S. and globally, you see, given that no other country has more than 500, there's an opportunity there as well. So our business globally yet on data centers isn't as big as the U.S., but our teams are spooling up. We have a task force focused on the global opportunity. But we have that insight right now working with them. So that means we have insight into where the site should be, what the design should be, how you should set up your supply chain associated with it. How do you account for weather, as we just talked about when you set that, and more importantly, cyber as well. So think about that. Build the infrastructure, the operations of it, the technology of it. You need the supply chain, et cetera, and then the ongoing sustainability of it. Because if a data center goes down, we just witnessed what happens when it goes down. So cyber and those things associated with it. That is what's happening. That's how Aon's helping. The challenge, to your last question, your network just reported a data center coming online for $11 billion. A week ago, I saw one of your reporting talking about other capital coming in, the fund of 27 billion. So these data centers are coming online for 10 billion, 20 billion, 50 billion. The insurance industry, traditional insurance, is a 4.6 trillion industry today. These data centers, companies are spending 500 billion in CapEx. In the next 5 years, that's supposed to be 2 trillion. 2 trillion versus 4 trillion. That means you need other capital. Our risk models are helping understand what that exposure is, what the risk is, what should be held by insurers, which should be held by reinsurers and other capital providers coming in. If we don't do that, and our colleagues don't do that, I fear that the insurance industry is going to be left behind and not benefit like Caterpillar and some of the other companies you're talking about benefiting from this. And all of this is to help the clients. All of it is about helping them be more resilient and hit their strategic growth objectives, giving them the insurance to help with that.
But if Aon has identified that, and that you can go in and be the leader in brokering deals between and coming up with complex ways to ensure that the risks are covered for these data centers, is that a big growth driver for you for the future? Do you see, a trajectory for Aon where now you're benefiting from the AI trade?
It's not only, the short answer to that question is yes. We have recently set up what we call a data center life cycle program. It really goes back to what I just said a moment, end-to-end coverage, insight to be able to not just help with the construction, but all the way through to cyber. We have put that facility in place, both in the US and we're focusing on that long term. So that is a big, and we're supplementing it with experts in the space, folks who know construction, who have been involved in the data center builds before. So we take our expertise with our analytics, given the insight that we've had. We're one of the first to the market to put this special facility in place. And I think that will be a growth driver for us moving forward.
Do you know off the top of your head what percentage of your business that is now and what it potentially could be?
We haven't fully disclosed that. It falls within our commercial risk business, which is over 50% of our overall revenue. We're nearly a $16 billion revenue company at the end of last year, and over half of that was in commercial risk. Construction and data center is a part of that, and it is one of the key drivers that I called out on the earnings call, both me and the CEO, just earlier today.
Edmund, it's great of you to join us today. Thank you so much for giving us some insight into where Aon is and where it's going.
Anytime. Thank you for having me, Contessa.